everyone, welcome to the daily technical video from the group 1. Today is June 29th on Monday, and the time is around 9 p.m. Eastern time. So we're gonna check out the market here. Now, there are two different sort of ideas that I want to present here so that you are aware of all the possibilities with regards to the market, with regards to the indices especially. If I take a look at the high-tech stocks in the group 3, which remains to be the strongest stocks right now, this is AMD. You can see right here in the pullback looks to be already correcting the March low, but at the same time you see it hits the blue box area, which is the 100% from the June peak. So technically it has reached the minimum target, right? And even though we're still looking for wave 5 on the downside, but since we have reached the minimum, technically this leg lower does not need to happen. We could be completed here, and then now we can be ready to go to new high if that's the case, right? Now, so that means we have reached the minimum. You can see some of the high-tech stocks here. Nvidia, another one which is also very bullish, all-time high, and pulling back in 3 waves. Now we're calling for a double, but there is actually not necessarily you do need to have another leg lower, right? I mean, we can call this WXY, I mean ABCWX, another ABCY finish here, and the entire correction wave 4 is completed, right? Now, if you take a look here, this is bouncing from the 100% extension area in the Nvidia, okay? So that means we should be looking for we have already gotten the bounce here, so either we do a double, or if not, then we can go to new high from here in the case of Nvidia, right? We can go to new high in the case of Nvidia, and this way, if the next leg lower doesn't need to happen, right? It doesn't need to happen. This one AMD also doesn't need to happen for this leg to the downside. But in some instrument within the group 3, we still do have incomplete sequence on the downside. For example, XLE energy here, we got this AP and then looking for equal target, which is still not yet reached, right? Now of course we can be doing, I mean, we can truncate, for example, in a short C, but still nonetheless we are still looking for the downside. Remember, you can truncate as well. If you draw a trend line like this, it can break above it here, as you can see. Another one that is not reached, XLF, still looking for EBC equal leg right here, and these two also still okay for now, as long as we stay below this trend line to continue to the downside. So you do get instrument that suggests another leg lower is a possibility, and that's why you have AMD calling for one more push lower, and then Nvidia calling for another leg lower, but that leg lower doesn't need to happen, okay? So all in all, instrument like XLE, XLF suggests another leg lower is possible in the market, but it's not something you should be selling unless you have a clear bearish sequence. So going back to the group 1, you got indices like S&P that clearly does not have any bearish sequence. It doesn't have a lower low, so there is no reason at all for you to try to sell this, because even this does not need to happen, right? And we can just continue to go higher from where we are. Now if we can drop from here, then this is the next support area. From here we should be able to find buyers and support for trace bounce at least, if not going to new high, okay? So that's the S&P, and then the Dow, same thing here. You also have this ABC here, right? Looking for this pullback, and this is the blue box. So if we can go down, then this is the next support area, at least for 3 pounds. We don't like selling again, even though that we are looking for the downside here, but again, until you break below that previous low here, technically this one is not yet confirmed that it is going to go to play out. All right, so that's the indices. As long as you don't sell it, you should be all right, and we remain biased on the upside. The price still remains to be to the upside in 3711 swing, as the high-tech stocks clearly has not finished the rally due to the stochastic RSI not yet showing any divergence, as we explained in the weekend technical video. Okay, now the yen bears, we are calling the cycle from March low completed. However, this too you do need to be careful. It starts to get very choppy here. Okay, and I've been mentioning this many times. We broke above the 2018 trend line, so you got to be careful here. This still can go higher one more time. Now remember, Aussie yen has not reached 100%, just like the Aussie dollars, right? From the lows in March. If you measure the 100%, it has never reached 100% yet over here. Okay, so that means we can still see another leg higher, similar to the Aussie dollars. If you take a look at the Aussie dollars, we are still looking for one more push higher as well, like this. So that still can happen, right? So Aussie yen still can do break higher one more time and go to maybe retest this next trend line here around 78, right? So it's best to be careful with the yen bears right now. Don't try to sell it. You only got 3 ways pullback from the peak, it looks like. So no 5 ways down from the peak, so no bearish sequence. Same thing here. So it's kind of sideways in my opinion in the yen bears right now. So it's not something you should be trading at this point in time. And again, if you look at this long-term trend line, you do need to be careful. It could really be extending to the upside. Same thing when you take a look at the euro yen, also breaking above this 2018 trend line over here. So it could be doing double. Now this could be an indirect correction, or it could be doing a double, and you can see it's retesting that trend line now. So you could be doing a double. Now you can see for now the pullback from the June clearly is only 3 waves. I mean, it's counted as a 5 waves, but it's kind of borderline. I can call it 3 waves and perfectly fine to be a 3 waves, you know, like a 1, 2, 3. So all in all, no bearish sequence here. We're just trying to fit the count into a bearish view, so calling it 5 waves. But from the distribution point of view, this is the biggest swing here from the peak, so this could be counted as 3 swings as well. Okay, so all in all, gotta be careful here with the yen. Euro yen can do double. If anybody wants to sell the yen bears, has to be from extreme, like Canadian dollar yen. If you sell it from extreme, you should be okay now, risk free. Otherwise, don't try to play in the shorter cycle here. US dollars has reached the 100%, but that too is also very sideways, right? That too is also very sideways. We have reached the minimum target here, the blue box, so we can start to see a rally to the upside or 3 pounds at least. But in the shorter cycle is very sideways at the moment. Okay, very sideways. We do have what looks to be a high here, so overall we can see more upside above 97.15, but again it is quite choppy at the moment. It can do double before another leg lower. Okay, and this leg lower doesn't need to happen because we have hit the 100% here. So again, dollar index, the real key level on the real major support is this trend line here from 2018, which has not broken and still holding for now. If that trend line ever to break and close below it, there's a possibility we're gonna have a 5 ways down from this one here. 1, 2, 3, 4, 5. So just watch out for that. If we do really break down over here, let's say, then potentially like I said, it could be a 5 ways down from the peak. Okay, so now let's take a look around the market. Now again, US dollar CAD, New Zealand dollars also has hit the 100% extension here. So it has reached the minimum target here for at least 3 pounds, 3 reaction, right? US dollar CAD, same thing, already hit the blue box. Sorry, New Zealand dollar, so it doesn't need to do another push higher and can start to do a bigger pullback. But at the same time, it is very interesting if you take a look at the weekly. It is sitting at a very long-term trend line from 2014 here. So if it breaks higher, that will be pretty interesting, if we can sustain the break, that is. But that's where we are. I mean, we can be looking for a pullback here soon in favor of the US dollars, at least in 3 waves. All right. If not, then we might. I mean, in order for US dollars to continue weakening further, we need to have a lot of breakout here. I mean, we are in a long-term trend line. New Zealand dollars in 2014, dollar index is from 2018. We are now sitting in the long-term trend line. All right, so let's take a look here now. The Dow, as long as we stay below 26,296, we can go lower. We do not like selling. There's no reason to sell. If there is a pullback to this area, then we do like, again, the bias is on the upside in 3711 swing, so we do like the upside from this blue box in 3 waves at least. DAX, don't like selling. If we can go down, then this area here should see support for 3 pounds at least, if not going to new high. So shorter cycle, we do not like selling. Okay. You can see right here, it looks like a 3 waves pullback here as well. So here we got the Nikkei is sideways. Don't like selling. As of now, as long as we stay above 21,377, we can extend higher. If we break down, we're going to be doing a double with the next support area at the next equal leg. If for some reasons we break down in the Nikkei, then this is going to be the next support that we like to see more upside, or 3 pounds at least. S&P, don't like selling. If we can go down, this is the next area where we like to see support, to see buyers from here for 3 pounds at least, if not going to a new high. Alright, here we got the Aussie Yen. Okay, so Aussie Yen sideways for now. Aussie Yen sideways. And again, I don't think there is anything good at this point in the yen pairs, and we just have to wait and see. Still can go higher. Canadian dollar yen can also go higher. I mean, there is no bearish sequence coming down from June peak, so also don't really like doing anything at the moment. It's very sideways. Euro yen also very sideways, and can even do double correction here. Okay, commodities looks pretty good. Silver, we're looking for extension higher. Now silver is at the very big resistance here. I mean, if we can break out of, let's say, 19, that should be pretty big, right? 19 to $20. I mean, that will be a big breakout in my opinion for silver. If that can happen, potentially can be, you know, can really indicate the bullish cycle has started, right? Until then, we just have to wait and see what happens here. Still fighting here between the bulls and the bears at the moment. So in case of silver right here, if anybody bought this risk pullback last time, then you should be long and risk free right now. Gold we like higher, right? Gold we like higher. This is the blue box area, extending upside from there. And yeah, at this point we continue to like more upside in 3711 swing against 1668. The Aussie dollars, we are looking for another leg higher later on. However, it doesn't have to happen. We could be completed as well because US dollars has reached the minimum target, right? So all in all, also is a little bit choppy and sideways in my opinion. New Zealand dollar, same thing. We can extend higher, but it doesn't have to. We can be completed and then starts to extend lower as well. But this one looks like a 3 wave so far, so that unless this is a flat here, A, B, C, and then so okay, you can get 1, 2, and then 3. But if this is an ABC, then argues that this pullback here is still corrective at the moment, and then so another leg higher cannot be rolled out. Now New Zealand dollars is very interesting in my opinion, just so keep watching it because it is at the 2014 trend line at the moment. US dollar CAD looking for another leg higher here. We do have a high sequence already in the US dollar CAD, so we could see for the upside to finish the 5-way sub over here. Alternate, this could be an ABC, finish as a short C and then starts to go down. If we can go to equal leg, then minimum target here is going to be 1.3860 on the upside. That will be in the minimum if we can reach the 100%. But alternate, like I said, is an ABC, truncated ABC, and then starts to go down again. So here's the look at, we have a 2017 trend line here, so cannot rule out one more push lower to retest that trend line, by the way. Okay. The euro already hit the blue box, still consolidating at the very important trend line as well here from 2018, and at this point the reaction seems to be pretty weak if you ask me so far. I mean, I want to see it accelerate on the downside if it is really going to hold below this trend line. Okay, otherwise if it breaks above it, it could potentially become 1 2 3 4 5 from the lows. Okay, and can potentially retest this trend line here around 117. The pound doing a 3-ways up and then looking like a 5-ways down so far. From it's either 5-ways down or it's a WXY, right? Yeah, either way. Now if the divergence is erased, then I think you have to switch to WXY. But if the divergence is still there, you can call it 5-ways down. And if this is 5-ways down, then that suggests after the rally is over, we can see another leg lower at least. At the moment though, the pound is kind of risky to chase because we have seen already, like a 5-ways down right now. Crosses, we are still looking. Crosses, I think the most important one is Euro Pound here. We like more upside. We have a bullish sequence in the Euro Pound. We got this high sequence 1 2. We have a 100% target here towards 0.9236. So technically we do like more upside. We bought it here in the live trading room, this ABC 100%, now doing nicely. So now we're still looking for the upside, and any pullback is still gonna be a buy in 3711 swing for the upside in the Euro Pound. Okay, so that's the update for today here in the group 1, and I'll see you again tomorrow. Have a nice day, everyone.